smooth jazz work into the day here. How you doing today? Welcome to the Closing Beat. We are financial advisors here at Jazz Wealth. We do numbers, the physical stuff. I'm getting old. I don't do all that stuff anymore. But hey, quick friendly reminder that there'll be no show on Thursday. Very lucky, actually. My daughter got me tickets to see David Copperfield on someday this week. So we headed out to go see him. Looking forward to that. While other advisors are playing checkers, we are playing chess. Really cool one that I did with somebody. They have this account and they want it to last 5 years, but they need a certain amount of income through the 5 years. And they also want to deplete the account to have it be gone at the end of 5 years. So it was a matter of figuring out like, okay, how do we get your income, but deplete the account and make the tax benefit there? It was a real brain teaser there. So I love it. I'm spent for the day. Let's talk about the stock market here. Oh, by the way, wine and wealth. Last week, we talked about new tax laws coming your way, just super cooking through Congress, and looks like a done deal at this point, provided that Biden signs it, and he will really be forced to sign it. So that looks good there. This week, Eric is going to take over, and he's going to talk about the new 529 rules, but more importantly, the strategy, right? And show a real simple way to just go through and figure out how do we make the most of it. You know how some people know the tax laws, and you're like, okay, that's the law. No, how do we make that a part of our life so we can get the most out of it? That will be what Eric's going to talk about there. That'll be tomorrow. That'll be Thursday in the dojo. Vice President pick. Oh, I can't see it. Slight update to that. We talked about that yesterday. We got a little bet going around in the office. Who's going to be the vice president pick? Chris is going to go with a non-white male politician. So we're just having some fun with the guesses there. And what did Doug go with? Do we know? Doug went with
female.
Went with female white politician.
Yeah.
It's on the board, but we can't see it because it's dark over there. So take your guess. Who do you think is going to be the VP pick there for Trump? Just because that's all we can talk about right now for political world. We'll do some more bets as we go. Try to make politics fun this year. Maybe win a few bucks. So we'll see what happens. All right, let's take a look at the S&P here. Moving on. Not moving on. Not working. Here we go. We'll do it this way. So here's the S&P sitting at highs once again here. It's a great time to actually revisit a chart. So you remember in this world here, or in 2022 when the market's falling and all the news seems doom and gloom and oh my God, it's going to be so chaotic. The market's never going to bounce again. Well, I thought it'd be a good time to revisit. That's just not working at all. Revisit the pullbacks from all-time highs. I got some really cool stats for you here. Here is as far back as I could show. It starts to look really horrible if I use the entire S&P history here. So going back into the 80s here, the zero line is when the stock market has hit an all-time high. All right, so right now we've hit an all-time high. There's no further for it to go if our definition is show me when it hits an all-time high. So here's all the pullbacks from there. One thing to notice, it's always recovered. We had a fun towel that we used. We got to break out those towels at some point. There we said the stock market recovers 100% of its declines 100% of the time. And we put it on this towel so when you get a little sweaty and nervous and stuff, you wipe sweat off your head. But if we look down here, yeah, okay, we had our pullback that took us into November, right? All good. We've since recovered. We've had numerous pullbacks, whether they were COVID related or financial crisis related or .com related or whatever, some worse than others. But the point being, tell yourself now, while everything is good, that it will be good when we have the next pullback. Because if you wait and you go in here and you try to tell a friend or something like, hey, don't panic, man, the stock market's falling, you should be buying. Well, if you wait until then to tell them or to tell yourself, you're emotional. It's too late. There's nothing you can do, right? Now we're feeling good. We're not emotional. We don't see pain or we don't see fear right now because things are good. So if we look at that and go, oh yeah, look, that does happen, then you train your brain to sort of get wrapped around pullbacks being an exciting event. This took me a few years to get around this, but I was sort of raised this way, where I want to buy cheaper. I don't want to buy right now when everybody else is paying. I want to buy cheaper there. Now, a couple stats for you. So here we have the stock market, right? Obviously today sitting at all-time highs. Did you know that in the entire lifespan of the stock market, it is only at all-time highs 7% of the time. So most of the time, 93% of the time, we are not at all-time highs, right? We hit them and wiggle around, do whatever, you know what I mean? So get that in the head. right? We're not always supposed to be at all-time highs. There's supposed to be opportunity. There's supposed to be moments where people get fearful and all that stuff. 15% of the time, the stock market is within 5 to 10% of all-time highs, meaning it's in like, it's down here. It's off of highs, right? So 15% of the time. And the most fun one is 45% of the time in the stock market's life, the whole history of the S&P, 45% of the time, the S&P is 10% or further away from all-time highs. So 45% of the time, you're getting at least a 10% discount. That's pretty cool, huh? When you word it like that, you can change words and make them sound whatever. But I thought that was pretty cool. So that took forever to do, but now you've got the data on that one. Nonetheless, right now we have the S&P sitting at all-time highs and up a handful of days in a row. And even like today, if you look, like, let's try this here. If you look through like a 5-minute chart, we started off by going down. This is today, actually, right here. So we start off by going down. The afternoons have been giving us that little bit of oomph, shy of yesterday, but you get what I'm saying. So when you look at this current stock market, there's really no fear, not by you, but by people participating, by everybody. The trouble is only a handful of stocks are getting us there. That's kind of frustrating. That changed a little bit today, but right now it's, we're being lifted by just a handful of stocks. Kind of bothersome. All right, moving on. I'm at it today, man. Let's go. So the Dow. Well, unfortunately, the Dow was held back by really just 3M, right? So earnings season's going to do this from time to time. We have 3M, big decline here today, and that offset the gains, also earnings related, from Procter & Gamble. It also offset the gains from earnings related Verizon, and it also offset the gains from United Healthcare, not earnings related, but a big price stock. So remember, the higher the price of the stock, the more impact it has. So 3M's decline here was really to blame. If it weren't for 3M today, the Dow would have been right there playing with everybody else. All right, let's go through a few others here, and then I'll take you through some other thoughts. The Russell pulling back ever so slightly, it's okay, right? It had a great little rally off the lows. It gave you the pullback. You're probably fine with that. The NASDAQ sitting at highs, that's a no-brainer. It's all the big stocks. It's big tech. AI, the names you've heard of, right? That's all that's lifting this market at the moment. You got oil taking an off day here, and I would argue probably taking the month off, right? A little choppy. You would expect some news to really jostle it back and forth. It's just not doing that. We found a little range here. People are maybe a little fatigued with the news that's out there at the moment, not scared or excited or whatever. Bonds moving just a little bit higher. Interest rates, I should say, moving just a little bit higher. And that's okay. We talked about this back in here somewhere. Remember when everybody was super excited about the Fed cutting rates 6, 7, 8 times in 2024? Yeah, that's not going to happen. The Fed has done a great job. I'll give them credit for this one. They've done great at sort of holding down your expectations. And it's working. We can tell because we can look at the Fed the actual futures traders, the way they're positioning. So it's not a survey. This is the actual way they're positioning. On the chart, don't let it scare you here real quick. What I did is that you can look this up yourself if you'd like. I went to March. And I said, okay, where are we at now? We know where we stand right now. That's right over here, 5.25 to 5.5. And what's the probability that it stays the same? The probability that it stays the same currently is 52.6%. Anything to the left of that is the probability of a cut by a quarter point. So this is 1 quarter, this is 2 quarters, or a half, right? Well, what's cool is you can look at the bottom. We keep a little bit of history here. So what is the probability right now that the Fed will cut rates in March, not February? February is basically, they're leaving it the same, 97.5% or something like that, that rates won't change. Okay, fine, February is done. That's like 8 days from now or something, right? They're getting ready to do that. But now we're all looking to March. That's where everybody's looking right now. The probability of a quarter point rate hike cut is 46.2%. Is that high or low? Well, we don't know. We need history to tell us that. Look down at the bottom. 1 day ago, 1 week ago, 63%. 1 month ago, 75%. So what does that tell you? The Fed realized we all got a little bit carried away there, and bonds were pricing in more rate cuts than they're willing to do at this point. So they come out, they talk, do the jawboning and all that. They did it. They brought bond prices down. They brought expectations of more cuts down. We now have essentially a little worse than a coin flip of whether March is going to be when they cut. March at the moment will be the focus month for everybody in terms of that Fed meeting there. All right. What else do we got here? Oh, did you see overnight? Little lesson, quick lesson. So have you ever heard of the plunge protection team here in the U.S.? A lot of people think it's like conspiracy or whatever. This actual, it exists. There are members. Well, in China, they call it the Chinese National Team or just the National Team. It's the same thing over there. It is the group that, and they're open about it, right? They are full on. They'll tell you what they're going to do. They are trying to stop their markets, particularly the Hong Kong Exchange, from going lower. So what they do is they'll just openly tell people, we're going to take, and in this case, 280 billion US dollars, but in their currency, I'm just converting. And we're going to go buy securities on the Hong Kong Exchange to essentially try to stop the bleeding that's going on over there. And so because of that, you saw names overnight, but then it translated into our markets, of course, like Baidu. All right, fine, you got a great day. Hey, what happened? There was no real news for Baidu. The Chinese national team saying, hey, we're going to go in there and sort of soften the blow a little bit and try to help out. Awesome. Alibaba off the lows. You see how bad this stuff looks, right? Over in China, it's not very good. There you go. You get a little support, right? That money coming in there. JD.com, right? Awesome. Right? So if you notice that how you say it? If you notice that maybe your international fund, if it's like heavily in China, right? If you notice that performed well in your 401k when you see it or whatever accounts you have, there you go. It is like our plunge protection team. It's called the Chinese National Team if you want to look it up. It's not like an Olympic team. It's a money team. And they come in there and basically stop the market. Well, they're attempting to stop the markets from going lower. Pretty cool. Okay, remember, we're in the thick of earnings season. We're going to talk about some of those stocks here in just a moment. But if you have a stock that is a day or two away from reporting earnings, I'll give you a couple examples because Netflix came out today, right? Look what happens before earnings come out. No major decisions, just leading right up to it. Oh, Tesla is a great example, right? No major decisions. It's not going up, it's not going down. Every time it tries to go up, it kind of equalizes. Every time it tries to go down, it equalizes. No major decisions. And then when earnings come out, bam, right? I mean, where are we at with... where is this at? Like 530 something? You're going to have all-time highs tomorrow if nothing changes on Netflix, right? So keep that in mind, right? All right. I will, let's do some stocks in the news. And, do we have a winner or not a winner, update?
Yeah, you got a new leaderboard for Tuesday. We got Joe, Jarek, Stephen, Lee, and Carolyn M. Those are your top 5, and we were talking earlier. There's a lot of groups of like 3 or 4 that are really tight, and you actually see it kind of in the middle there with Jarek, Stephen, and Lee. So
yeah,
it should be a fun little end of the week. Jazzwealth.com/guess the Dow for a chance at $100.
And keep in mind earnings this week. That's really going to jostle up things. Well, and it has with 3M and everything. Is that Joe W. The client?
I don't have that information right now.
Okay. If you look it up, it's kind of like Ouija, but with other letters. That's who I'm thinking of.
Okay.
I mean, I hope. Hey, look, I want clients to win. Anybody's welcome to play, but of course, I'm cheering for the team here, so that's how it goes. All right, let's dive into some stocks in the news and give you some news that maybe you wouldn't have been able to get anywhere else because, well, it's fun. United Airlines. Remember, we did the thing. So we talked about this when the door fell off the plane. I keep thinking of that skit that I was telling you guys about. Where is it? Well, yeah, here we go. So we talked about this before. When the door falls off the plane, we're like, hey, who's in trouble here? Alaska Airlines has 65 MAX 9s. United Airlines has not the biggest as a percentage of their fleet, but they have the most amount of those MAX 9s. I'll grow up at some point. But where the door fell off. All right. So anyways, United Airlines comes out with their earnings. Bloomberg reported last night that the CEO is like cussing up a storm. He's yelling at his friends and he's like, this is ridiculous. He's so frustrated with Boeing, and he's like, I want to see some faster changes. These guys are absurd. He's very mad, right? So, some sort of angry tirade that he went on there. Nonetheless, they come out with earnings. They beat on earnings. They did lower their guidance going forward. They lowered it by 50%, kind of thanks to these things here. And what's really cool, I took an extra second on this one. Let me see if I could show you. You know how airlines make money, right? Do you know what they do? So airlines don't make money consistently by selling you tickets for a higher price. whether you pay 300 or 400, whatever it is you're paying, they're not really counting on that as their profit center. It's everything else that they do is how they make money. So in other words, you analysts, we can break it down by their revenue that they make for their tickets compared to the cost of that passenger flying 1 mile. So it's called revenue per available seat mile is how you look it up. And so I've always looked at the numbers. I did a chart here for you today. So here's where they stand currently. In blue is their revenue, just ticket revenue. And then in light blue is their cost. So look at how close this is. Pretty consistent, right? Their revenue and costs are really tight. That's not a bad thing. That's actually really normal. You could take a handful of airlines short of Delta, and you could do the same thing. So their profits are made on all the other stuff that they do. The ticket is just to get you in the plane. I mean, you got to go somewhere, I guess. But you can see real closely how their revenue is very much in line with their costs. And that's the name of their game. Just keep it that way. Just keep it that way. If we could do a little better, a little worse, a little better, a little worse, whatever, we're fine with that. Baggage fees, changes, all that stuff, rewards points and all those programs, that's where they're going to make their reported profit, usually when that happens. So when there's a large spread here, that's a great thing for an airline. Right? And I mean a large spread, more revenue than costs, of course. So when you see someone like Delta Airlines and you're like, well, these guys are killing it, right? They have a bigger spread, and that's attractive to some people there. So anyways, I just wanted to point that out. If you look at the stock, there we go. If you look at the stock, obviously a little bit of a gain here today, a little bit positive going forward if you take out the MAX 9 issues and some of the frustrations that they had, but thought that'd be a fun way to explain it to you. All right, Halliburton, slight rally here today. They beat on earnings, and most interestingly, they raised their dividend. They were paying out 16 cents. I think it's only 17, actually. That's not that interesting. They raised it a penny. I don't know why that's on there. Never mind. Dr. Horton, one of the big movers here in the markets today. So, you know, is kind of a miss. There's some good, there's some bad in here. One of the things that people look at, orders, closing, backlogs. Okay, so if you're a new home builder enthusiast and you like investing here, we look at orders. Do we have new orders, less orders? Are the orders rising? Are they declining? Do we have closings, more closings, less closings? How did that go? Are we delaying the closings because there's some issue with building the houses, whatever? And then we look at the backlog, right? That's like if you're talking about like a subscription service business, like we'll get to in a second, then you're looking at something like that going, okay, we've got subscribers. We're good. We're going to get that revenue. They're going to pay something next month. It's all great. Well, if we look at the backlog, we anticipate that some large percentage of that backlog of orders will eventually be a closing, right? So when you look at Dr. Horton, orders missed by a little bit, but technically are still going up. I didn't have time to put a chart together there for you. Orders are up 35% year over year. It's just that Wall Street expected more. One of the bad spots is their backlog is going backwards, right? That's where we start seeing the weakness, and that's what people tend to say, well, maybe you're not worth $157 a share. So that's what happened there. Speaking of subscriptions, Verizon adds 1.4 million paid subscribers. That's good. It doesn't sound like a lot, but they're behemoths anyways. That's good that they're able to take just that little fraction of the market share there. And they also beat on earnings with no shockers guidance-wise. So going forward, they're like, we're good. We're happy. Maybe we'll do the same, slightly better, slightly worse, but we're happy where we're at. We're going to ride this ship while we can. And lastly, not as interesting. I'm just going to bring it up here because of what's going on. So Synchrony Financial, it's been a while. They bought and closed on Ally's personal loan business. So they essentially went to Ally, or Ally went to them and said, hey, we've got these personal loans that we do where people can just click and get a personal loan if they want. We don't want to do that business anymore. And Synchrony Financial said, we'll buy it. We'll take it. So one of the first things you look at there is if you buy a book of loans, a book of debt, how good is that debt at continuing to make their payments? Fine. They did great. They actually, their delinquencies were actually down a little bit. Here's the trouble. It doesn't seem like it's going to stay that way. When a bank, any financial institution, they all have what they call loss provisions. Sometimes it's loan loss provisions. Sometimes it's deposit loss provisions. Things to basically, it's like your emergency fund. I don't know how to say it, right? So they're assuming people are going to pay their debts, and something's changed where they think that more people will not pay their debts and will become more delinquent. And that's actually happening. Their delinquency rates at 4.74%, which is over here, same height as COVID. Uh-oh, those were tough times. we're at the same rate. So because of that, Synchrony Financial said, we're going to take a wad of cash and we're going to increase our loss provisions by 50%. There's just a little sign of, well, why? What's going on there? I'm not sure I like that answer. I'm surprised it did not hit the stock a little more. Also, we got the New Hampshire primaries going on, so expect a whole full night of political excitement there if you're into that sort of thing. And was it Nikki Haley and Trump? Are they the only two left? Is it two? Okay. Well, I don't know. I don't know anything about that. We'll see what happens, but I'm sure that'll be all over the TV. All right, I'll take your questions in a second. Tomorrow, the big name is Tesla. So after hours today, it was Netflix, and it looks like things are going well there. But tomorrow it'll be Tesla. During the day, you've got Progressive, CSX, IBM. You've got General Dynamics to follow up with some of the defense that we had here today, Raytheon and General Electric, etc. You've got some semis, Lam Research there, Las Vegas Sands. Yeah, that's pretty much it there. What do you got for questions? Did it cover it all? Did you learn something today? Did you learn a little something? I did. From myself. Here you guys are warming up over there. You guys, we should talk about the weather more. There's a lot of weather talk in this room here. Yeah. Hola. I love it, man. Why? Oh, DWAC. Oh my gosh. Yeah. So that had a $20 range today? Pretty much. Yeah. I mean, close enough, right? I can't do the math fast enough here. That's not what I want to show. This guy right here. So basically a $20 range all day. Good luck with that. I just watched it, thought it was fascinating, but I have no idea what to do with that. They're now, they're going to be worth $2 billion. So I think at the close today, I think it got to be at like 52 or so. They'd be worth $2 billion. So again, anybody, out there, if you'd like to invest in Jazz Wealth, become an owner of the company. We all have some shares we'd like to sell you at this multiple, by the way. It's got to be this one. And I promise not as much volatility in your share price. I don't know if I'm legally allowed to make that offer, but so be it. If you're going to value us at $2 billion and we make a profit, they lost $25 million last year. So yeah, have fun with that. Anybody that's trading it, good times. I see Celsius there. A pay for waiver trade on XLP outperforming the market today. Yeah, they're killing it. We talked about Celsius yesterday. A bit of a shocker for me, honestly, with the valuation that they have there and what they're doing, but they're doing it. Yeah. I wouldn't do it as a Staples replacement, though. I don't know about that. You could do better as far as getting a better total return. I think a better total return. You're worried about your position. Oh, with earnings coming up. Very common question. Yeah, I got you. Lots of weakness across sector chips, talking around midpoint, 3-month high, and down about 10% considering selling from here. You're comfortable with options, maybe? I'm not going to go through it if you're not, but if you're comfortable with options, you can kind of play a game there. But if you're not, if you're not, first of all, skip all that. If you've owned it and you're down 10%, that means you owned it here, right? Wait a minute. Hold on. Yeah. Unless you had the worst buy ever in history, like for this stock, at least at the moment. No, that means you owned it somewhere in here. So you were fine with this. No, stop it. Stop it. Not buying it. You handled that before. Expected move is about $2. You'd be fine. If you could handle it at 61. Aaron says, when you receive a return of capital, which lots cost basis are adjusted first? When you receive a return of capital, so you've invested in something where they pay you, there's something that looks like it comes through as a dividend. Let's say it's $1, and they've determined that 50 cents of it is a dividend and 50 cents is a return of capital. It comes off your basis. It is not a per share calculation, right? So if I'm understanding correctly, and that's the product you have or something like that, it comes off your basis. So you're going to keep your total basis in the position. Most of the advanced platforms will do that for you. You got a commercial. Yay, we made 6 cents. Maybe 8. If you watch the commercial, maybe we made 8 cents. I've shared that with you guys before, how this is for the love of the job, not for the love of what you get paid, because it's kind of a joke. But all right, cool. I'm going to wrap it up there and get on about my day. Got a bit of a late start here today. You guys enjoy the rest of your day. We'll see you tomorrow. Remember, no show on Thursday, but there will be a wine and wealth and all that good stuff. You guys enjoy, and see you then.